silver's, this is the monthly chart. Silver's, it is trending. It does have some mixed signals. I'm just going to flip back to the daily chart. Silver was oversold. You can see on the 30-minute chart here on the left, this lime green is saying silver's oversold. Likely we're going to see bargain hunters step in and buy it up. Silver does have a fairly decent chart pattern unfolding here. We've had a nice move up. It's now building a bull flag pattern or a pennant formation that it could have a nice pop. So just based on this move, there is potential for silver to have one more big squeeze and push up to about $38 an ounce, which is percentage-wise is very big. Let me just zoom way back on the charts here. It's best if I just drop down to a monthly chart. If we take a look at where that price level extends to, that 38 is right up into this high over here that we saw. So definitely a very significant level in this major top where price came down. It has a bars opening and closing, starting and ending here, and then over here in a peak high. So that will definitely be a major resistance area. It's a measured move. There is potential for that squeeze. It is hanging in good. I believe gold's pretty much put in the top. The pattern that we've seen. Now this is the monthly chart. I'm just going to drop back down to the daily chart. I'm not saying to pick the top and short gold. I have to keep restating that because people keep saying, you said it's topped. Now, gold is in a very strong bull market and a very strong uptrend. It has hit its measured moves, but it doesn't mean it's fully topped. Anything beyond this is pure icing on the cake. If you're long, you need an exit plan for eventually when it rolls over. But overall, like we've had a few different patterns, very high momentum patterns where we hit these 100% measured moves and it's rolled over. We also have this little move over here where it's showing that we could drop down to about 31.45 still. The first level of support is going to be right here where it actually found support last week, and it's finding support as we're speaking right now. It's starting to bounce off here. But gold is still in a bull stage. This is just a three-wave correction at this point. It could continue to go higher. I'm still bullish on gold. I do believe it's telling us a big warning sign that I think we're going to see a big financial reset. It is generally a leading indicator for that. Based on this chart pattern, if we have to draw the next level of where gold could pop and rally to, I mean, it's fairly significant. Based on these chart patterns, it's showing that we could see gold go from where it is right now all the way up to 37.50. And this is why you don't want to try and pick a top in gold. You want to just understand that this parabolic move that's happening in gold is usually what happens right before it reverses and we go into a recession. But there's still potential for another leg higher. Like this is a strong bull flag pattern in the market. A bull flag is a halfway point. So whatever this run up is, this flagpole, that is usually what you stack on as the next move for the second half of that. That's how kind of Fibonacci theory somewhat works. So overall, I mean, still bullish on gold. Don't pick a top. Don't sell it short because it could continue to go. It is somewhat in bubble phase. And the phase that we're in right now, James, is very similar to, if I was to just zoom out to previous time frames, this kind of move, we hit our massive measured move right here at 27 to 2800. This move that we have right here is a very similar type of blow off move that we've seen over here. We saw right over here. And it doesn't look like it because the charts are stretched from the high price, but there was another blow off phase here. All of these are similar setups where the markets become weak and people pile into gold and they create this huge move. And they had already hit all of their measured moves before that. So we are kind of in this, blow off phase where who knows where the top is. Nobody knows where a bubble is going to finally burst or when. Just know that it's right now screaming there's economic crisis coming, and that's why people are moving to gold and expect a sharp reversal at some point. Like if I had to look forward 8 months from now, I'm bearish, but right now I'm still bullish. Okay. So it's still in an uptrend. It has a tight pattern. It looks like it still wants to push to go higher. But to buy right now, I believe you'll be able to buy it cheaper 6-8 months from now. So it just depends on the outlook that you have, the time horizon.
Gold has surged powerfully, reaching all its measured targets in this current cycle. While some say we're near a top, Don't mistake that for weakness. The charts reveal a parabolic uptrend. Textbook bull flag setups suggest another leg higher to around $3,750. However, traders beware. This euphoric stage often precedes financial turmoil. Gold is waving a red flag. Something big is coming. Silver, long overshadowed by gold, is stirring. Oversold on the short-term charts, it's showing signs of a bullish breakout. With a potential surge to $38 an ounce, silver could deliver serious upside, but it comes at a cost. Highly volatile and unpredictable, silver's wild swings can wipe out gains fast. If momentum continues, miners could benefit too, but caution is key.
This is the monthly chart. Silver's, it is trending. It does have some mixed signals. I'm just going to flip back to the daily chart. Silver was oversold. You can see on the 30-minute chart here on the left, this lime green is saying silver's oversold. Likely we're going to see bargain hunters step in and buy it up. Silver does have a fairly decent chart pattern unfolding here. We've had a nice move up. It's now building a bull flag pattern or a pennant formation that it could have a nice pop. So just based on this move, there is potential for silver to have one more big squeeze and push up to about $38 an ounce, which is percentage-wise is very big. Let me just zoom way back on the charts here. It's best if I just drop down to a monthly chart. If we take a look at where that price level extends to, that 38 is right up into this high over here that we saw. So definitely a very significant level in this major top where price came down. It has a bars opening and closing, starting and ending here, and then over here in a peak high. So that will definitely be a major resistance area. It's a measured move. There is potential for that squeeze. I'm not a big fan I haven't been a big fan of silver. I'm just not a fan of the price action. Up until about a week ago, it's starting again to show a bullish pattern where this could hook up and turn and start to run. And if it does, we're going to see probably gold miners and silver miners do well also. So, the only silver is really volatile. It can just in 2 days, 3 days, you can lose 20%, like click of your fingers. So it carries a lot of risk. Whereas gold is a bigger, slower moving beast. It keeps making all-time highs. I mean, if something's working really well, I don't know. I generally don't want to change something, right? So gold to me is the gold standard of the play right now. If you want to be in precious metals, just play the one that is constantly making new all-time highs and that the whole world is moving into, versus trying to go into something more volatile because you want to make more. That doesn't mean you're going to make more. It probably means you're actually probably going to lose more, or you're going to ride a wild roller coaster and it might not even make anything in the end. So that's the way I see it. But silver does have a bullish outlook over the next month or so. It is pointing to higher pricing if it starts to turn up here. It might get back up there and test those highs. And if it does, it might want to poke through it with a minor pierce. But at this point, we can only take it kind of one leg at a time. And a leg is using these Fibonacci, these short-term patterns to give us the leg. The next leg up is right now, based on the chart pattern, is about 59.50. So that's the next target. So you say 58. We do have to modify our analysis as the market evolves. So now it's actually 59.50 is kind of that upside target where momentum will run out. It's kind of right where the market had a huge reversal here through a lot of noise. So there is some upside. I mean, when we look at it as a percentage move, you can see here based on where it is right now, it's about a 4.5% move. So there is some potential to squeeze some money out of this market. But I don't think it's going to make really new highs. I think eventually it'll roll over. And I think we're going to have a series of a lot more bad news and for the economy to turn down and the stock market going forward. I believe we will eventually. I think we'll go a lot lower after that. I think we're going to see a very big correction. 30, 40, 50% from the all-time highs at some point is what I'm expecting. I mean, I'll take it one bar at a time, but overall, that is what I am expecting is a huge financial reset. I think we're going into a big one. There's a lot going on with transportation. The tariffs have caused a ripple in the global universe, and it's going to catch up to us in a few weeks. They're talking about 7 weeks or so. We're going to start seeing shelves being empty. We're going to start seeing supply chain. It's going to be like a mini COVID in a way, except for obviously it's not fear driven. It's just pure, CEOs are saying pause on everything. They're not wanting to put in orders. They're kind of on hold. They don't know if the tariff stuff's going to be lifted in 2 days or 2 months. What's going to happen? So it's going to be very interesting around, but it's going to create a slower economy, fewer sales. That's not good. That usually means we're going to see, the economy weaken, and a lot of stuff going on in the whole transportation space in general.
Markets like the Nasdaq and S&P 500 are painting the same picture: rally, suck in buyers, then reverse. Technical setups suggest a short-term pop, maybe 5-6%, but institutions are selling into strength. History repeats. The public buys at the top while pros quietly exit. This double top pattern may be the last breath before a major correction hits Wall Street. Apple's chart screams trouble. Lower highs, lower lows, a classic downtrend. Yes, a short rally to $220 is possible if the market climbs, but long-term, Apple, Nvidia, and big tech could be slashed by 50% if recession hits. Volume spikes and weak fundamentals reveal investors are already nervous. Institutions are preparing for the storm, are you?
Take a look at the NASDAQ. It's pretty much the same thing. All these markets move together. They all rally, they all sell off together. Obviously, percentage-wise, the NASDAQ can move more in both directions. But it still has this similar upside potential. If we just look at the short-term price action, based on the most recent kind of run up in this little intraday, this whole kind of flush down and recovery, it is still showing the NASDAQ could run about 5-6% to 21,284, somewhere in that range, which again will break this previous high. It will create a big short squeeze. People will start to cover. People will become then very bullish on the market. They'll probably start to move into the Russell 2000, small caps, big tech again. And really, the market will run right into resistance, into this double top that we saw in the NASDAQ. And then I think it'll eventually roll over. And that's typically how the stock market goes. It'll get everybody really bullish. The general public will pile in. They'll buy the shares. Institutions will be selling into this. And Wall Street or Main Street will be left holding the bag of stocks near these highs, and Wall Street will be selling into it. And we've seen this a lot. I watch the intraday charts all the time, and I watch how the market walks itself up. It gets people excited and bullish, and people start to get, I have indicators that give me FOMO, tell me when people are chasing prices higher. And then we see institutions, heavy volume, block orders going on, big selling. So this is definitely a game. This to me is a bounce, and institutions are lightening their portfolios, selling shares to the general public. And if we can get the markets to run above the high that we saw in the SP 500 and NASDAQ back in March, then I think we're going to see that wave of people become very bullish. There's going to be a lot of people screaming all-time highs in the markets, but that's probably going to create that liquidity for institutions to start dumping even more shares. So that's what I think is going to unfold. And NASDAQ, SP 500, same trade, same pattern, just more volatile than the SP 500. The whole market is kind of, there's no doubt Apple is in a downtrend. We have a series of lower highs, a series of lower lows. That is the definition of a downtrend. So overall, it's had a very similar pattern to the SP 500 and the NASDAQ, which is a highly volatile bottom. It's struggling under resistance. I'm not a big fan of the chart. To me, this still looks, I think they got a lot of problems going on with the economy slowing. They're going to get hit, but overall, it is in a downtrend. It's pulled back to support. It does have big volume selling in the last couple of sessions. Obviously, it had earnings, which creates even more selling or more volume. But overall, I'm kind of neutral on it. Overall, I think the market is going to be heading lower, and Apple to me just doesn't. I believe their time, they're shining in the market and the investor eyes. Like, there's no doubt Apple's a great company, but I believe that wave of everyone piling in and chasing Apple higher is kind of over. I think the sentiment has shifted. The economy is about to slow, and it's going to go for a big correction. I do think if the stock market rallies, I do think we're going to see Apple probably want to come up to this 220 area and break this high. And it could have a fairly significant pop and move up with the market. But overall, I do expect it's going to eventually sell off, probably break all of these lows and go a whole lot lower, down into the mid 100 range going forward. Same with like NVIDIA. I believe all these stocks are pretty much still going to get cut in half from where they are. if we flip into this recession that I think is coming, and what all the charts are kind of pointing to, all the technicals, and even some of the economic data are all warning us that the music is about to stop. And right now, it seems like people are scrambling, institutions are scrambling to kind of lighten their portfolios to try and get out of equities before they really start to plummet.